Wow, that's different. So you gave up on US distributed China tea and buying, in fact, directly from Hong Kong. I, in fact, gone the other way around. I used to buy specifically Indian tea, but recently I saw in, I think it was in my office. I had a tea which was like, it was amazing. And I looked at the brand and now I ordered that from Amazon. And my wife liked that too. So instead of buying an Indian tea from the brand that I had used for many years in India, I switched to a new one which is sold on Amazon. No, I think you can get it in the other stores also. Later, get me the brand. Sure. Yeah, I'll have to go back to my Amazon purchase and figure that out. There were multiple flavors of teas. All right, let's give a few minutes for others to join as well. Okay, I see Leonard has joined. Hi, Leonard.
Hi. How do you pronounce your name?
Vivek.
Vivek. Okay. I'm very excited to learn about the future.
Oh, we all are, and the future keeps changing, and that's what the exciting part about this economy is. So then we'll have a few more people, so we'll give them some time. But we've been doing these sessions for quite some time, and used to cover some of the basic stuff earlier. Nowadays, I also go through. So today's agenda is I every week I go through the funds flow report to see where the institution money is moving. And then we have a topic for the week, but I'm open for any other discussion. So essentially, this is to figure out what's working, what's new happening in the crypto world. What are the exciting projects? Sometimes we discuss some of the exciting projects. That where in the community they bring up something, so we talk about it. Sometimes we go to the infrastructure layer, like we discussed last time. We looked at all the scaling solutions that can help, is helping a lot of blockchain, layer one blockchains.
Can I say a couple of things, Vivek? So I had no idea that just buying and tracking crypto would be so difficult. I'm so excited about this because I'm a social activist, and I think this is like the democratization of money and can lead to, the world's financial independence from political systems that are too often bought out by corporations. And so the world is, like when the internet first started, this is probably like that change on steroids.
Absolutely.
And so I'm a teacher, but I'm financially in debt. And I'm hoping I could learn. Okay, so 10 years ago, I was at a teacher meeting, and one of the teachers I was there with, her high school son, said, Mr. Siegel, because that's, they call it, out of respect to older people, you should really buy Bitcoin, which at that time was 8 cents.
Yeah.
It was like 2010. And I said, oh, sounds very interesting. I don't have the time for it with all the stuff going on with the teacher stuff and these meetings and so forth. But so I'm want to go ahead and find the next Bitcoin, and it's not just even finding the next Bitcoin, but understanding the difference between yield farming, staking, DAOs, the signals about when to buy and sell, the speed of which you see what happens in the stock market going up and down, which the insiders know when to buy and when to sell, and the average person does the opposite and loses money. But now what's going on with crypto is it happens at um, exponential speed.
Yeah.
So I'm looking forward to, learning things like the exchanges, the wallets, I think it's some trader view. I think that's what it's called, where
Yeah, there are, I mean, there are charting available. Trading View is the one which I see a lot of crypto traders using it. I personally don't engage in too much of a trading on crypto. I spend a lot of time in analyzing the projects and build my conviction and hold it for a long term. But there are tools available. There are tools available, and one of my agenda, at least if I get through it during these holidays, is to study more on the on-chain analytics. There are like Glassnode, is there Dune Analytics, Messari. They provide a lot of on-chain analytics data, and I've seen at least the crypto Twitter space focusing more on the on-chain analytics than the regular charting pattern which are used on the
wait, what is it?
stock
What
world.
is? I'm not understanding the terminology you use. That's the
So
opposite of of tracking the charts.
right, so for example, in on our charts, like the regular on the stock charts, there are tons of charting patterns which are general traders are pretty familiar with all those, right? It could be either like Bollinger Bands or moving averages, channels, head and shoulders. There are hundreds of patterns, and every trader build their own. Specifically Bitcoin, which is publicly you can analyze because all the data is publicly available. The analytics performed on the data which is derived from open blockchains, that is called on-chain analytics. Right? And the sort of intelligence that can be taken out of that on-chain analytics is mind-blowing. We couldn't have done it in a traditional market because that's not open. We cannot analyze who is buying, who's selling in general stock market. So we generally look at the price, volume, and basically price and price action and volume, and derive a lot of trading patterns from there. But if you're interested, on-chain analytics is additional area where you can put more time and effort in learning that. By the way, you mentioned you're a teacher and social activist, so you might want to watch this particular YouTube video. It's a long interview of Lex Friedman with Alex Gladstein, who is a human rights activist, and which talks about how this crypto and Bitcoin in particular would help
Following this conversation.
a lot of folks around the world. Sorry, someone was saying something.
Sorry about that. You see that video I put on above yours? He goes through the pros and cons of crypto.
Yeah. Thanks for that. Yeah. So I think there are multiple ones because I think Leonard mentioned he was a social activist. So then Alex Gladstein name struck me because he talks about in detail.
I'm curious, what's the cons of crypto? Because I haven't heard a valid con yet.
Well, I'll tell you. Wait, can I tell you how difficult it is for me to get on these exchanges? It is not.
You're right. As long as you get it on specialist centralized exchanges, but it's not a crypto problem. It's a governmental problem.
Yeah. Well, Leonard said it was freeing from the government.
I would like to know what is a con of blockchain or crypto by itself without any governments trying to control us.
Well, try watching the video that I provided.
So I think
video a long time ago. That's not a problem. I just don't necessarily agree with that, and I believe a lot of cons are not cons, they're just difficult. Just because something difficult, it doesn't mean it's a con. There's something that does not have ease of use is not necessarily a con.
And
Okay, can I interject here? I can give you some cons, and these are some things that as I'm listening to try to learn, I'm not even sure of the questions, but a couple of things need to look out for. And I totally appreciate Vivek saying, look for a project that you believe in because it's going to actually do something in the world. Some of these cryptocurrencies are really like memes. You're buying into something that doesn't really fund anything that does in the world.
I agree. I'm more than agreeing with you. And in fact, I can even agree if you say none of the cryptos that exists now is going to be existing in a Web3 world that we're going to develop. Even the Bitcoin, I even will agree with that. But that's not a con of crypto. It's a con because it's in such a early stages that we haven't developed the tools to develop more sophisticated things that can serve the humanity for the rest of its life.
so only con, I mean, again, when we're looking at the cons or pros, it comes from the perspective, right? I don't see any con, but those who are against could also point it out in terms of to generate, let's say, on those which are working on a proof of work, right? And have become successful, right? Generally, you will see that energy consumption fund is being brought up because nowadays there is so much focus on ESG related stuff. Right? I don't take that as a con, but again, depends on perspective.
Can I make a quick comment about it?
Sure.
So I don't know if you're aware, but 80% of electricity that is lighting up the bulb behind you that allows us to see you is being lost in a transmission between the place it was produced and your house that you see.
So Marina, I like I said, I don't take that as because I know how much, and we're going to talk about in Messari crypto report today, right? In terms of how the Bitcoin is actually helping renewable energy, how the Bitcoin is actually tapping the untapped energy sources across the world. So I'm not in that camp, but there are people.
Just a second, Vivek. Not just that, but cryptocurrency acts as the way to save the unused energy. It's like a saving place. It's like a bank of unused energy because whatever energy does not get used gets transferred into the crypto.
Yeah,
and then
I
you
agree.
It's like a battery in a sense.
Yeah,
It's
I agree. Go ahead.
Yeah, hey Marina, how's it going? So I think one of the problems I kind of have, well, it's not a crypto, I don't personally see as a crypto issue, but coming from a kind of a developer's perspective, the problem I see is people kind of pretending that they're using blockchain tech kind of in a decentralized way, but in reality it's not, right? So like the only reason I'm putting up,
Jim, you're absolutely correct. But that's not a shortcoming of crypto. It's a shortcoming of human beings. Just like the comment
we're not going to get rid of human beings anytime soon, right? Like I hope not.
Yeah, so I mean, I agree with I kind of agree with Vermeer because there are always bad projects on the technology, right? The internet, we still have fake websites on the internet. Not a problem of HTTPS, not a problem of World Wide Web, but there are fake projects. We have companies, we have a white collar crime in our society. We have companies that are fly by night operated. That doesn't mean the whole capitalist structure itself is doomed. So
I would argue the only pro of blockchain tech is decentralization.
Yes, otherwise why
everything else stems from that. Like everything else is an extension of that. Like if we don't care about that core thing, it's almost like we're gonna drive a car, but we're not gonna move it or something, right? It's like it's useless without
build it on Exadata, right?
But it's not useless because decentralization is such a great thing for everything, including elimination of middlemen.
Not if you run it on your desktop. Like I can run a blockchain privately on my desktop where I'm the only node, and the blockchain would suck, right? Like I control everything. Like what is the use of that, right? Like I when I debug, I run the Ethereum node locally, right? And then I control. I fork mainnet, so I control everything. Like I'm God on that chain, right? Because I'm the only node, and nobody else can do anything, right? So so that's useless. And my problem with a lot of these blockchain projects is that the only reason I put up with this crap, actually, it is a pain in the butt to develop blockchain stuff. It is like absolute trash in terms of like tools and
I describe it, putting handcuffs on and coding with your chin.
Yeah, the only reason I get to put up with this trash is because I believe in decentralization. I think this is the only, this pro like outshines everything else, right? Like I'm willing to like spend nights trying to track down like an issue that I would probably be able to track down within 10 minutes in a traditional centralized system. Right?
It will take time. By the time we have all those tools built up for debugging or stuff, we are way early in this game, right? So
absolutely, I describe it. We're digging ditches with our fingernails.
Exactly.
The shovels not only has not been done yet, but they don't even know what the shovels would look like,
right?
Or what would they be. Otherwise, if it was easy, they would have already been done.
Maria, I mean, I have to buy a wallet, and it's really complicated. I mean, when
it's not complicated. I use ETH Brown. My hot wallet is an encrypted JSON. I use it through ETH Brownie. Now that's more complicated, right? But I use Ethereum through the command line. Okay, let's just put it this way. But like for MetaMask, it isn't complicated. Come on, is it really that complicated?
Wait,
James, I think from a common person view, right? It's not complicated for you. Maybe not complicated for me. I have had discussions with many of my friends, and they're just so scared to touch it. The easiest work for them is to go to Coinbase and just do an account.
Exactly. Vivek, it's complicated for them, not because it's complicated for most of them, because I had a friend who's like, you have to sit next to me for me to do it.
Yeah.
And I'm like, no, you do it yourself. If you run into a problem, I'll sit with you. She did it in 20 minutes. She's not a techie. She's like, oh, it wasn't that hard at all. I'm like, well, I told you to try. It's not that as complicated. What complicated is a changing of the way people think, that if they make a mistake, they have somewhere they can call and say, fix it, reverse my transaction. I made a mistake.
Which is not going to happen.
I know it's complicated for their brain to reframe itself, thinking, I'm responsible for every one of my action. And if I made a mistake, it's final and it's going to cost me.
Yeah.
And I cannot hold anybody else responsible for it. And I cannot get anybody else to help me.
Yeah. And I had one of my friends who, while transferring to someone, made a mistake. And then he was so angry at me saying, what is this? I can't, they can't reverse anything. And I also had a friend who was trying to move to his hardware wallet, was so scared of doing because there are so many steps. I, in fact, went to his home and actually helped in moving his access to a hardware wallet. So I mean, in my opinion, these are all the growing pains of this industry. We'll need to have a UI. We'll probably, at the end of it, looking at 10 years down the line, it should become as easy as us doing any transaction on internet right now. Go back to 15, 20 years ago, doing an online e-commerce, mentally we were so not ready. How can I believe something, putting my credit card information on a website which I don't know? But I think slowly over time things should become better. So I see Leonard raising hand. Go ahead, Leonard.
Okay, so hold on here. So I just want to introduce myself and maybe suggest that you go ahead and control the conversation where we can all, now that we're here, introduce ourselves, what maybe something like what we were hoping to get out of the meetup meetings, and then I don't know, whatever the agenda is after that. And my name is Leonard. I live out here in Los Angeles. I'm a teacher, and I want to learn and teach how to make the better world by learning crypto and learning how to profit and help other people profit from projects, or maybe create their own project to fund something to improve the world. And so really I'm more of a student than like someone who seems to be as knowledgeable. I'm going to have my camera off most of the time just to save bandwidth, but I want to introduce myself to everyone.
Oh, thank you, Leonard. Yes, there are some new, most of the folks probably already know me. We've been doing
Excuse me. Can
Sure.
I address Marina? I mean, Vivek knows this, and I came back from China a year ago. Not to say life in China was easy, but I thought U.S. citizen, no problem getting a job, no problem buying crypto. And then I opened a SoFi account finally after, I guess, 2 months, and they don't even have at that time Solana.
Yeah, so Simon, again, I mean, different
No,
accounts would
Vivek,
bring
I'm not
different
talking to
way.
you. You
Right.
know all my troubles with crypto, but it's not easy. And then people could steal it. I mean, I just, I don't find it decentralized and all that stuff. It doesn't seem to be the nirvana that everybody's looking for. If you look at that video I put there, he talks about the pros and cons of crypto.
Yeah, so I mean,
I have seen the video one more time. You're not hearing me. I've seen the video
So-
when it first come out. I live next to Lex. That's not an issue. My point being, first of all, just because something is difficult, not mean it's a con. I'll give you an example. Higher level mathematics is very difficult, but
It
it's
is
not
econ.
the difficulty. You didn't want me to interrupt you. Why are you
Yeah.
interrupting me?
Sorry.
all right, so
You did not find difficulty of mathematics as a con, right? You just accepted it. There is, you're not ready to accept that you can get hacked and that crypto is difficult because you've been spoiled by society to think that your money is safe. You can go to the bank and demand the reverse transaction, and the government will insure it for, I don't know what it is now, $250,000 or whatever, each account.
yeah.
If
So-
you,
So I guess,
Go ahead.
Marian, I don't think we'll ever get to the end of this discussion, because this is very near and dear to everyone on their belief systems. But at least for the folks out here, I think we all are interested in this because we believe that this is gonna this will change the world the way internet had changed it, right? And we as a
no.
my-
It will change. Just a second. It will change the world a lot more because so far we
exactly
only
right.
illuminated. Vivek, so far we only illuminated the middleman using internet in taxis, airplanes, and maybe hotels. Everywhere else, we have not illuminated the middleman.
Right.
you-
So
The
coming.
sweatshirt that you're wearing, before you were able to put it over your head, how many middlemen did it go through between the time that the seamstress sewed it and the time it went over your head? What blockchain will allow you to do to get rid of all those middlemen that make 90% of their money.
Yeah, that's what we are hoping for. What I meant to say is the quantum, the jump from the prior age to the new age, right? Internet was the way it changed the economy, way we interact, way we do commerce. Internet changed it. Blockchain is again going to do a next leap of change in which we probably will be trying to eliminate the middleman and have more peer-to-peer trustless transactions. And I think that's what we believe in. That's why we started to learn about this, to be in a forefront of understanding how these things will change. And number two is, get ahead of it. My intention here is also, as a retail investor, how can I learn about more and more projects? How can I be active in this particular technology along with whatever I do on my day job, right? So that's the purpose of this meetup. We are not here, especially I'm not here to change anyone's opinion of whether you believe in this one or not. Everyone would have their own level of comfort with this. My own very near and dear friends probably are not okay with this, but I am. But we are still great friends. So I think this is very personal topic in terms of how much belief do you have. It's not a binary, it's a spectrum. Some people are 100% in it, some are 20% in, just trying to explore, some are just learning about it. So
what people don't want to accept is, on a blockchain, just like not everybody is comfortable creating their own website, not everybody is going to be comfortable maintaining their own
that's
wallet.
okay.
I agree with you. Maintaining your own wallet is a little bit above the level of creating your own website.
Correct.
But people who are not capable of creating the website pay somebody to create and maintain their website. The same thing people are going to do by creating and maintaining wallets, or keeping their money on exchange, which is even more likely to get hacked.
Yeah.
And to respond to Zidi's comment in a comments, which said that it's risky. Yes, the blockchain requires you to accept your own risks.
Yeah.
It's incredibly risky. Even the developers who are very good level developers and been developing on a blockchain over 5 years, I happen to know some of them lost over $250,000. Everybody lost some money on a blockchain because everybody makes mistakes. The losing the money is a price of learning. And that's why instead of opening accounts of $250,000, you should open an account for $100 and lose $100. And that would be the cheapest lesson in anything you have ever gotten.
True that. So let's get on with today and learn more about on the crypto side, right? So our original idea was maybe to look at a ribbon finance, but I came across a particular project. Not the project, but a report from Messari, which is an analysis company in crypto, and I was blown away. I mean, it's a very long report. We'll not be able to go through all, but I did pull out some of the pertinent information under various sections. So I want to go through that, and I hope it will be interesting. It talks about what the owner of Messari, Ryan Selkis, he thinks about, it has got his thoughts about 2020 and how he looks at crypto will go in 2020, right? But before jumping into that, as always, let's look at the funds flow report. It's always interesting to see what the institutional money is, where the institutions are moving money, or what's happening in the crypto world as an investor. Again, my focus is more here to look at from an investor perspective. I know some of you are developers, which are great. I look at more from a major economy and investing, and that's where focus on analysis from that perspective. So looking at the weekly funds flow report is the first time after almost 17 weeks after almost 4 months, we actually saw total outflow. And otherwise, it's always been an inflow into this economy, irrespective of whatever has been happening on the stock side. On the stock side, we have had some hard times, especially in the growth companies, growth and IT companies. But even then, on the crypto side, from an institution's perspective, most of them were buying. But this week is the first week after 17 weeks that we saw some first outflow. No, it's a minor. It's $142 million of outflow, which is only 1/4 of a total asset under management. Right. So not a big deal.
Excuse me. What does an outflow mean? That means that they're buying, they're cashing out?
Outflow means, yes, either the investors are selling out and converting into the fiat currency. So many
Okay.
of these, so for example, the biggest one, here's a Grayscale Bitcoin Trust. So those, for example, individuals like you and I, we can go and open an account in an exchange, say Coinbase, or you can open in Kraken. There are multiple exchanges available, and we can directly buy crypto over there. There are institutions or funds, or let's say pension funds or retirement funds, who are not allowed to hold crypto by their charter. Right? They are all governed by some regulations, and they are not allowed to hold crypto. So what they do is invest in these trust funds, who in turn will hold and buy cryptos. Right? So that's where we're looking, or it could be, for example, an institution, let's say stuff like MicroStrategy, opening a fund and buying into it. Right? So when you buy it, if I go and buy a trust unit, it means money is flowing into that trust. Then in turn, they will buy the crypto asset for me. If I withdraw my money, it means I'm selling that trust fund. Then they'll have to, then those will sell the cryptos. So, the majority, the biggest one is still Bitcoin. And what we noticed that in this week, some coin shares, they saw the outflow, 3iQ saw the outflow, overall $142 million of outflow, which is not too big. I mean, this is, in my opinion, this is pretty small or pretty negligible. But even I'm not worried about it, because if you really look at what happened in the stock market last week, there were major outflows across all the risk assets. Right? When I say risk assets, means your high growth, the companies, tech companies, which are not making money right now, but are expected to make money years down the line. Right? That they saw a lot of outflow. We also saw little weakness on the stocks last week because of Omicron concerns, and also with the concerns that Fed is going to increase interest rates more, sooner than what was expected. So it was a general phenomenon across, I think, the investment spectrum. This week has been better, but last week it was weak. It was really a negative week across the investment perspective. So when people become a little concerned, they move towards safe assets. One could be they will cash out and hold cash. Other could be they move towards the bonds. We saw TLT doing better, and they also flowed into the crypto side. We saw some outflow from.
Before you leave the chart, can we ask a couple questions about the chart?
Well, before you do that, I want to comment. I'm going to make a comment about your last sentence. When you're talking about safe assets, you have to remember, if you keep your money in cash, you lose an 18% every year.
You and I agree about inflation.
Just a second. Sure. Let me finish the sentence. So I don't know how it is a safe asset that loses 18% a year.
So
maybe it is much safer to keep your money in crypto that had a propensity, not maybe on a daily basis, there are days when it loses more, but on a yearly basis have yet to lose 18%.
Marina, you are talking like I would talk. What I'm referring to is what the rest of the majority of the people or the market still thinks. I know it is safe. But if you look at regulators, banks are still not allowed to open it up for their customers, right? The rest of the world has to wake up to it. It's volatile. Today, Bitcoin or these are still, in a traditional investment perspective, is considered to be volatile and unsafe. And whenever
even in a non-traditional, I agree, it's extremely volatile. And if you need the money tomorrow, or you count, you should not do it. Yeah. But I'm saying, if you're a long-term investor, if you
this is not long, right? This what we saw outflow is over what happened the last week. I know that over long term, Bitcoin has outperformed all the assets, right? but still considered a risky, and you are getting paid for the risk. How many people, the traditional investors who wants the safety of, who cannot see these ups and downs, 80% down for multiple times, would have gone through the whole cycle of holding it, right? So generally when we see a weakness, those labeled as risky assets will see an outflow from it. I mean, the numbers speak to themselves. We had an outflow from institutions' perspective. Forget about individual investors. We had after 17 weeks, we had an outflow of 142 million. So in any case, so over the funds flow, that's what we saw. But I'm not deterred by it. I have my own thesis around some of these projects, and again, as always, we should never take any decisions in hurry. Whatever happened in a week or a month or a year doesn't matter. In at least the way I focus on, it doesn't matter in a long run of a decade. My thesis around this is decade or longer. This is we are way early in this case.
Vivek, what is a provider? In the chart.
Provider for this report?
Yeah, on the left side it says flows by provider. What
provider means, okay, so provider, yeah, so provider are who are these, this is a Grayscale Bitcoin Trust. These are the ProShares is also an issuer of a ETF. The ProShares the recently approved futures Bitcoin ETF was issued by ProShares. So
a provider is a stock or an ETF?
No, provider
is an ETF. Provider is a middleman that is unfortunately by laws required to exist, and who makes money for no reason, because our government cannot make laws where anybody can invest directly. And so the large institutional investors who are prohibited by law in investing into the crypto invest into the fund who collects money from the deal for no reason whatsoever, other than our government prohibits them from investing into crypto.
Right. So provider, let's say mutual fund creator, right? If you invest in a mutual fund, somebody is creating the mutual fund. In this case, the providers are the people who are the companies or the institutions who create these funds. Right?
Okay, and then on the right side, we have flows by asset. I recognize Bitcoin, Ethereum, Binance, which is a coin and an exchange. But what is the one in between Ethereum and Binance that says multi-asset?
It's a multi-asset. It would be, for example, some of these funds. They let's say Grayscale has got multiple funds. They got a Bitcoin fund, they got an Ethereum fund, they got a Solana fund. Similarly, Purpose has got Bitcoin ETF, ProShares has got a Bitcoin ETF. But companies like Grayscale, they also have a fund which is called multi-asset fund. So when you see the outflow, it means the outflow has been from that multi-asset fund. So it's like considered equivalent of a mutual fund on the stock side. And you could have a mutual fund for different purposes. You have a mutual fund focusing on the auto sector. You have a mutual fund focusing on IT, ESG, EVs, or you could have a mutual fund which focus on multiple themes. So the multi-asset is a fund which I know Grayscale definitely has a multi-asset fund, but I believe maybe some others might also have. Okay. So that was on the weekly funds flow report. Now comes the exciting part, and we have 45 minutes. Hopefully we'll be able to go through that. But this is a report from Messari, like I mentioned, which from Ryan Selkis, who is very vocal around what's on the crypto side, and a very strong proponent of crypto economy, right? Starting with Bitcoin plus others as well. He's been also been with some tiff with SEC based on what SEC based on the regulations or the inaction from SEC around the ETF approvals, plus a lot of regulations that SEC is, or the lack of regulations, let me say, lack of clarification from regulatory bodies. So I'll quickly go through what Ryan thinks will change in the crypto, or how the crypto will behave, or what his thought process is around cryptos in 2022. And we can have a discussion, and what you think about all of these. So if you have a question, just raise your hand, and then we'll go through that, or maybe put it in the chat and I'll address it as we go along. So first of all, why are we even here? Why are we talking about it, right? So he says, I'm sick of feeling like we have to apologize for our early stage and walk on eggshells around politicians and regulators. We built a $2 trillion financial market, I think today is even higher, from scratch in less than a decade, probably 11, 12 years, if to be accurate, with absolutely no institutional help and active encumbrances from the government. Meanwhile, banks give you 0.025%, that is if you have a high yield savings account, on your deposits, and front run your trades legally, and DC grifters overspend and debase your tax dollars. More infrastructure bill and more spending, while the insider trade stocks with impunity. Nancy Pelosi stock tracker. Like other early stage transformational tech markets, there are some characters, some bad characters, but mostly it's just brave entrepreneurs and innovators. Don't spit in our face and pretend you are here to save people from us. We started this movement to save people from you. I completely agree wholeheartedly in terms of what these entrepreneurs are trying to do in this economy. And I don't like the paternalistic attitude of the government or regulators saying we are trying to save you. Probably my personal opinion is they're trying to save the incumbents, but I guess everyone have their own opinion. We'll see how this goes. So in the overall report, again, it's a long report. My idea is to maybe go through it word by word over these holidays. It's 165-page report. It talks about 10 people to watch, top 10 thoughts on Bitcoin. These are the various sections. I'll probably go through some of these sections which are relevant here, which will help us to understand what's happening in overall, what we could look forward to as per Ryan in 2022 on the crypto economy, right? So top 10 narratives and investment themes. Why are we even talking about? Why are folks even moving towards crypto economy, right? Number one is collapse in institutional interest. Right? So this was a screen from Andreessen Horowitz, A16Z, and they have been a very active and well-funded VC in the crypto space. This talks about how much do we trust our government, right? So overall score from a government perspective on the scale of being ethical as well as competent. We think our government is neither competent nor ethical, right? Media comes somewhere middle. So clearly the trust in government is broken, right? That's one big tailwind behind people taking control, want to take control. And now the tools are being built out where we don't really always have to depend on government or on the middlemen to transact. Right? Crypto Web3 is inevitable. That's again at a high level is we're not gonna, this genie, we cannot put it back in the bottle. It's been there for 12 years. Initially, there were thoughts where, someone ban it. It's only a flash in the pan, or it's a fashion of the month. But now we're realizing more and more talent is moving into this industry. We have seen capital inflow into this, again, from a direct raises from individuals in terms of initial tokens or fundraisers from VCs, but a huge amount of money is now going into a crypto or Web3 economy. Right? Lastly is the timing. And the previous so-called crypto winter was the best that could have happened to crypto economy. Right? Someone talks to me about saying, oh, that economy was real bad in 2017, everything was hard, and everything collapsed later on. I'm like, that was the best thing, in my opinion. Because while the spotlight was away on the crypto economy, that's when the real stuff happened. No one was talking on CNBC, no one was talking about crypto economy, no media publications were focusing on what Ripple is doing or how Bitcoin is going up every day or how volatile it is or how is it crashing. Over the last few years, that's where we build out the solutions for custody, which is very, very important if as an individual or as an institution, anyone want to engage. I think the big risk is how do you keep it safe? So we had a custodial solutions built in. A lot of work happened in terms of scaling the blockchains, in terms of adding it for a new use cases, right? DAOs, DeFis, NFTs. We didn't hear about those things like 4 years earlier. So the timing was critical. It was because a lot of this infrastructure was installed during this last bear market. What next? Bridges and NFTs and DAOs. These are still areas, these are still new. And we should see a lot more investment in going into in building toolings for this, right? I think from a common person perspective, even buying and selling seems to be tough right now. But like we were talking a little earlier, and I think James mentioned, it's so difficult to debug any issues. There are not many tools available. So we will see a lot of infrastructure, especially around toolings, will continue to be one of the hottest investment in 2022. Again, not coming from me. This is all Ryan Selke's report. Same goes for the DAO tooling. Today, I think the DAO is the most least understood area of all the sections of a Web3 or crypto economy, right? Transfer or value money, transfer of value, gaming, NFTs, DeFi, DAOs. Today, DAOs are very loosey-goosey. I mean, some of the blockchains do some good job. Some of them just don't do it. It's just a lip service. So this is one which is the least understood. But if this really has to succeed, if this economy really has to succeed, this is going to be the topmost priority. We got to do this right, really, to actually move towards a decentralized world, or the move towards that project to be fully decentralized. The DAO implementation of DAO or decentralized autonomous organization, all the tooling required for this need to be in place, which means, you know, the treasury and all that function. How do you participate in a DAO? How do you vote in a DAO? How the projects are being brought up? How do you ensure the treasury functions are taken care of? How its funding happen? All that thing. Right? Lastly, but not the least, is plumbing. Even though a lot of work has happened on scaling side, we talked about a lot of scaling solutions last week. We'll probably touch upon some of them. I won't go into details again this week, but that will continue to, work will continue to happen on those as well. Not just scaling at individual blockchains, but also the interoperability. So today, these blockchains are all right now CompuServe and AOLs of pre-open internet era, right? So there are Of course, we are building bridges, etc., to move the assets around, but those are not the real solutions. So a lot of work happening, and which will continue to happen on interoperability. What else happened? Decoupling of cryptos. This is a cycle where crypto use cases unrelated to Bitcoins were finally validated and achieved meaningful adoption. Not everything is Bitcoin. DeFi NFTs were not even existing. Now we have a tokens which focus on specifically on a particular use cases, maybe gaming. So each of the crypto projects are now being recognized for different use for use cases. Permanent venture capital, in, up and down, but never out. So like we talked about it, that the VC funding in this particular area has been growing. Of course, there are times where you will see it going down, but overall, the trajectory is to the north. And lastly is how high can we fly? And this is where each one of us have to understand this market is really volatile. There have been multiple times when the market has lost more than 50%. Right? Especially the Bitcoin has lost more than 80%, because that's been the longest asset in this, and that it has lost more than 80% multiple times. Over the last 18 months or so, ever since the halving of previous Bitcoin in May 2020, we have been seeing kind of a, I would still say it's a bull market. Right? From 10,000 last year, now it is around 50,000 Bitcoin. It won't continue like this forever. Nothing goes up forever. Now, how high could it go? That's anybody's guess. And we have to be, if we want to in this, we have to be prepared to go through that volatility. Now, there were some questions on how do we identify. I don't think anyone has a crystal ball, but depending on which YouTube channel we watch, depending on whom we follow on Twitter, people have developed their own metrics, which could give them an indication on when to tighten the belts. So there's one which it talks about it, market value to realized value metric. So I'm only looking at this one because this was in this report. But like I said, there are many other metrics, and whoever becomes comfortable with whichever type of metrics, they follow that. So in this case, says if you look at MVRV, market value to realized value metrics, plotted in a chart, every time when it is above 3, it doesn't say above 3 for long, and it comes down. So we had it in 2017, 18. Then so-called the bear market started. And then we had it, again, haven't crossed it, barely crossed over here, and it's over here. Again, this is looking at a history, trying to predict the future. You may want to take it with a pinch of salt, right? But right now it's not there. If you look into the report, he will talk about some numbers around if it goes to 3, it means it could go to that particular amount. Right? We're not going to look at any amount, but all I want to say is it won't go up forever. So we gotta be comfortable and be ready to survive the winter whenever the winter comes in. And that is why I want to focus on studying the projects and build my conviction. The only thing that will help us in staying, whether it's a stock or crypto, I'm a similar investor, is build my conviction on why this is a great thing over a long term. Whereas I look at a long term, my thesis on this is 5 years, 10 years. So what happens next year if there's a bear market or a winter? I'm okay. But what can you do to prepare is don't lever up. Make sure you worry about your taxes. Make sure if you have sold something and you have made gains on it, keep that money for taxes aside. And even if you think that it's gonna go lower, just don't short it, because no one knows what will happen. Just be ready. If we don't lever up, we have money saved for taxes and we don't go short, we'll probably still be okay. And it's a volatile asset. We gotta be okay with that one. I see a question. Isn't there some limitations on new Bitcoins that drive up the price? So yes, there is so Bitcoin is, we only have a specific number of Bitcoins that can ever be minted as of now. The protocol limits it to 21 million. So if you have an asset that cannot be just created out of thin air, if you have a limited amount of an asset, and if the demand is high, it's a basic one-on-one economics, right? Limited amount of something, demand is higher, price goes higher. But that's a really long term we're looking for. On a few months or for a year or two, the pricing would depend on what's happening in the market. Right? Even though fundamentally it might be doing, there's more and more work getting into Bitcoin network to scale it, to add more use cases. But on a short term, it could purely be driven by the price action that could happen in the market. So it's not guaranteed that Bitcoin will always go up. I mean, we had Bitcoin falling almost 50% from 60,000 to, it was down to 30,000 a few months ago. Now it is back up to 50. It went up to 69, came back to 45. And now after moving in 45, now it is back to what today it is 50, I guess, somewhere 50, 51. So the thing is guaranteed to stay up. It will move. We look at this 1 year chart on Bitcoin. It's been all over the places, right up to 69, 40, 30 here. I see another one. On the new technology, NFT, metaverse, interoperability, and useful coin goes to increase the prices. So NFTs, right now, everyone wants to create their own NFTs, and a lot of work happening on the NFT side. In 2000, we had a similar mania also. Everything was going on to .com. Right? Again, if for NFTs also, there are multiple projects or multiple blockchains on which these NFTs are being created. Ethereum is one. There are other competitors like Solana, etc. Now, depending on which blockchain the NFT projects take off, probably there will be some demand for it. But if the NFT itself cool down, then the demand for those blockchain tokens or the assets will also cool down. All right, winter will come. I mean, as an investor, whether I'm in a stock or the crypto, always be prepared when the winter will arrive. And what else happened on the infrastructure or general investment things? We had a Coinbase that went public, right? At least in the mind of general public. Now we know there's a company that deals in crypto asset. That company is regulated by US regulators, and that company is now in public markets. The only thing that happened good out of Coinbase is it actually registered a crypto word in a regular investor mind. What is this company? It's a cryptocurrency, crypto exchange. What's that? And lastly, please understand that crypto trading is not always science. So it's also social and it's also meme based. You've seen a lot of these Doge coins, right? Different type of Doge coins. And it is nothing different than what we are also seeing on the stock market, wherein there are meme stocks with almost no value, trade at a way high valuation than where they should be. This is no different in the crypto economy also. You will find some worthless projects just being pump and dump. So something that we got to be careful about as well, right? Then it talks about what's a disclosure in terms of what he himself hold. TBI is the biggest idiot, means the CEO, means Mr. Ryan Selkis himself. Then there's a long list of what he and the many of the employees or his colleagues hold, what kind of coins they hold. Okay. So that's quick primer on the overall investment themes on the crypto assets. Let's see any more questions. Okay. Yeah, I see. Yeah, Marina, you had a question? Unmute.
Well, a couple of things. Since we think alike, I found something where we don't think alike.
Possible.
And I think you're going to agree with me. When I finish, you're going to agree with me anyway. But since Bitcoin is a deflationary currency, and there is only certain number of Bitcoins that ever going to be released, Bitcoin, as long as there is any kind of use or demand for Bitcoin, the price of Bitcoin will only increase and not decrease. Just like the dollar has never sort of gone down, sort of speak. I mean, it depends what you mean. If you're talking about gone down in 1 day, sure. 1 month, sure. Maybe even 1 year, but not in a decade, like you put it. The same thing with a Bitcoin. Since there is only limited number of Bitcoin and there is never going to be any more, as long as new people would be coming in, or the people who are in it going to be using it for something other. Go ahead.
Yeah, I agree. But it's of no use if I need money a year later and the Bitcoin is going to go up 5 years later, right? So that's you have to, that goes for every investment. You have to tie up your investment horizon with the asset that you're investing in. Don't never tie up your short-term goals with your long-term asset investing. If I need money because I want to buy a boat in next year, I'm not going to put it in Bitcoin. But if I want to save something for my, let's say, retirement, which is 20 years down the line, probably I could pick a Bitcoin, right? So it's always the horizon, time horizon, right? And I wouldn't say that it will always go up. Again, looking at a time horizon, it will have its own ups and downs. Now, depending on what your time horizon is, it will you can look at does it work out for you or not. Eventually, if it becomes a monetary system or it becomes a replacement of a gold, if the central if the today gold market cap is 11 trillion, if Bitcoin becomes a digital gold, that's the basic mostly theory around Bitcoin, is that it will become a digital gold. That's what the people like I would like to think, or those so-called the Bitcoin maxes would like to think. It will take years for that to materialize, right? I don't know, it's gonna take 1 year, 2 year, 10 year. But if I need it for next 6 months, anything could happen in next 6 months. Why did Bitcoin shoot up in Jan 2021? Because a lot of institutional investors started coming in 2020. Because a lot of work was done for custodying in 2018, 2019, early part of 2020. Now, why a lot of institution investors started to come in late 2020 is because the governments across the world, they pumped in and created so much money out of thin air that the smart money started to look at where else can we put our assets on, which cannot be inflated away by central governments. That's where then they started looking more closely at Bitcoin, because the whole idea around the Bitcoin always was it's a limited supply. You cannot inflate it away. No central banker can change the supply of this. Jerome Powell, right? We have created what 20 all the 25% of the overall US dollars ever existed have been created last year. Go figure. And we still are planning to create a lot more. Right? Governments, and this is not just US Fed. Central banks across the world have been just printing money out of thin air. And now we are going through, the effects of that. Inflation running hot. So that's when, after the COVID, of course, when the initial COVID happens, everyone's running towards the safe assets, right? So US dollar shot up really high, stocks were crushed, cryptos were crushed. But then looking at the response of all the central bankers across the world, people started to think about putting their money in, other assets which cannot be inflated away, or whose monetary supply cannot be arbitrarily changed or cannot be arbitrarily increased. Suddenly what was done by central bankers. Right? Now, just imagine the dollar that I held in my bank account is now 16% poorer than last year. None of my fault. I still worked as hard as I ever in my company, got the same salary, but the value of the salary is suddenly low. Just to come back to the level where I was last year, I have to work more, or I have to earn more. Means I have to now, if I earn by mortgaging my hours, then I have to work more. It is why somebody just inflated the currency. So Bitcoin is at least one where is no individual control. And that is why the institutional investors started to look at these crypto assets very closely in 2020. And a lot of money started to flow in. That's why it shot up in 2021. Okay. Now, there are a few thoughts about Bitcoin from Ryan. One is, okay, this talking about the gold. Peter Schiff is a investor largely in gold and a hater of a Bitcoin. But again, he was just saying, if you had invested $100 in gold 10 years ago, today you get $102. You can always find time period to match your perspective. But investing $100 in Bitcoin would have yielded $1 million, right? Other thing about Bitcoin, I'll put the probability of flipping maybe at 20%. Means, in his opinion, Bitcoin will still continue to be the leader of the crypto assets. Even if Ethereum, which is more around, the use case is more for transactional based, even the market cap of Ethereum overall goes higher than Bitcoin. It is not because it's considered superior money, but it is because the use cases are more, and the potential of the use of Ethereum could be more than the use case of a digital gold or a superior money, which is what Bitcoin is. What's the link to this report? It's on the Messari's website. Just Google for Messari 2022 crypto report. Yeah, it's a much bigger report. If you have some time, it's a good reading. I just want to introduce you towards what the content is, so that, and you get a little bit excited, get you guys excited about it. Multi-chain reserve. We cannot have AOL servers and CompuServes and some other providing their own island of internet. The future we'll have hundreds and thousands of interoperable blockchains. In that case, I don't have to worry about whether it's it's a Bitcoin is on Bitcoin blockchain, and it will be seamless movement around the different blockchains, because we could have a specific use case blockchains. And then in his opinion, Bitcoin could be a money that can be moved as and when I need to use it on another blockchains. Convert it into your, for example, it could be like, this is your Bitcoin could be your savings account. When I need to transact, move it to Ethereum or any other tokens, use it as my checking account, do my work, keep it there. And then when I want to store that, move it back to Bitcoin. So future, we will have multi-chain, and Bitcoin could become a reserve asset, which could be available on multi-chains. ETFs, not there yet. In Canada, it's already approved. Brazil already approved. European Union, ETFs are approved. We still have to wait. Other one is Great Fall of China. What good thing that happened is, if you look at here, overall hash rate in terms of the mining, where the mining used to happen, mostly in China. Now all the miners have been driven out of China and have distributed to different countries. Now, right now, the most of the mining happens at in US. A lot of miners moved out to US. So in his opinion, what he thinks is maybe China will get back into crypto because it's such a senseless strategic blunder that it's hard to imagine CCP failing to undo the mining ban, at least. We don't know whether it'll happen or not. Next, he talks about Bitcoin as a clean energy stimulus. We had some discussion around it earlier. Depending on which side of the camp you are, some says it's bad for energy, some says it's great for energy. Right? There are different reports which talks about how Bitcoin is actually using the energy that would have otherwise would have been wasted. I know of one company that's probably coming IPO, which uses the energy from the methane gas, which otherwise till now have been flared up and left into the atmosphere. Now the owner of those companies are actually putting and buying Bitcoin mining rigs because they're saying, why should we just waste energy? Maybe let's mine some Bitcoins. And this is not just one. I mean, we have seen, especially the Bitcoin miners, they are so nimble that you can just move your stuff and plug it wherever your energy source is. Right? When China banned all the mining, ecosystem didn't crash. Very quickly, all those miners, they spread out on the other part of the world and back up and running. Right? So it can help reduce by recycling otherwise wasted or stranded energy. Mining infrastructure could actually help subsidize new clean energy capacity. Right? If you are running the power plants and all that, you need a way in which if your demand at a consumer level goes down, you need a way someone else to consume it. Bitcoin mining company could become a part of that. And it looks to be it's possible that we may see a projects wherein the power plants could be actually paying money to some of these companies to take on that extra load. Then he talks about proof of stake and proof of work. In his opinion, proof of stake will continue to stay here. Don't think that Bitcoin will ever move to proof of work. Right? So you won't want a monetary system because the focus on the Bitcoin is to be a better monetary system. Right? You won't want a monetary system where a particular individual owns a large percentage of money supply and a large vote in which economic activities were valid on that underlying network. On the other hand, you will probably have no problem if you had accumulated a large percentage of decentralized self-driving taxis. So this is maybe dApps dApps and the DeFi other tokens, which are running on proof of stake. So his opinion is proof of stake for Ethereum. Yeah, probably fine. We don't consider Ethereum as a monetary system, but we don't want to have a monetary system move over to an area wherein someone with a large stake can actually impact the decision making and can change or can have a larger control on the future of that monetary system. Then we're going to end up into the same problem that we have right now. Classic part is, even though miners and exchanges, they hold the most of the Bitcoins, they don't have much say. They don't have, I would say, inordinate amount of say in the protocol development. We saw this in 2017. There was a very, I would say, contentious battle for SegWit upgrade. We've talked about it in some of the previous meetings, and miners didn't win. But if it is a proof of stake protocol, then it is purely dependent on how many tokens you hold. In that case, the point here is that we don't want our monetary system to be governed by someone who's holding the largest amount of tokens, right? Which kind of says the proof of work will protect minority rights. We've kind of seen that earlier in our previous Bitcoin upgrade in 2017, right? Then talks about the roadmap on Bitcoin this week, not this week, this year. And finally, in November, we had a Taproot upgrade. And next, the big one is a Lightning network. The usage, the growing usage of the Lightning network. Right. Again, still a lot of usage have coming in because of El Salvador accepting Bitcoin as their currency, and all the transactions are now happening over the Lightning network. Right. So that's his thoughts around the overall Bitcoin. Okay. In next section, Ryan gets into the American crypto policy. I won't get into these, the policies or the regulations. I would rather focus more on the next one, which is the market infrastructure. What's happening in this? What's his thoughts around the overall infrastructure of crypto markets, right? So he talks about the stable coins. And in his opinion, stable coins and the lending products and the regulations would be a good thing for an industry. I think Coinbase wanted to launch a lending product and got a slap from SEC, and they didn't move forward with it. I know stable coins have become an integral part of this crypto economy. There are stable coins which have use US dollar as a reserve or as a backup asset. There are some which use algorithmic ones, but it has become such an integral part right now that any issues around the stable coin could also cause, I would say, a crack in the market, from a short-term perspective. Okay. Then he also talks about TradFi, traditional finance, saying banks, legacy trading desks, asset managers, they all can enter crypto, and probably they will sooner or later with a variety of offerings. But the game is basically over. Short of indiscriminate crackdowns, if a government keeps the sane head, probably we won't have this. Record-setting M&A deals means hopefully the traditional institutions or incumbents won't buy up all the crypto companies. The CeFi firms, crypto firms would have won, and they will not cede their lead back to the Wall Street. I think this is probably too optimistic right now. I know at least those who are in this economy, I'm probably one of them who has been moving my assets out of a traditional FI to move to a CeFi or DeFi platforms, right? But still, there's a long way to go. Centralized exchanges or one of the DEX is decentralized exchange growth has been nuts, right? And centralized exchanges can't compete with them, right? And in his opinion, the DEX momentum will persist for long tail assets, and the new synthetic instruments like for the long tail assets and the new synthetic instruments. as decentralized markets that build off open source code will be broader and more dynamic than their centralized counterparts by definition. You know, if you look at the amount of the volume of trading that happens on decentralized exchanges like Uniswap, etc., sometimes it is actually more than what happened on Coinbase. So that we have already seen many days when those things have happened, that the decentralized exchanges have seen more adoption, more volume than the centralized exchanges. Next one talks about payments innovation. To me, the most exciting trends in crypto payments are probably obvious. Stable coins have exploded, like I mentioned earlier. Settlement volumes on both Bitcoin and Ethereum are up by multiple orders of magnitude in just past couple of years only. And every time I send a USDC payment, USDC is a stable coin, to fund an investment, I weep tears of joy that I don't have to initiate a wire on a banking interface that looks like it was designed by someone who still plays Frogger in their spare time. I don't know about the design, but what I like about this, and when I send or transfer USDC, I don't have to wait for long. You know, first of all, I don't have to pay huge charges. Number two, I don't have to wait for hours for it to clear. Right? ACH, the bank-to-bank transaction, which is free ACH, still take 3 days to clear. Moving USDC stable coin, it means I already have taken out the volatility of a crypto asset. Move a stable coin from one blockchain to another takes a few minutes, and you see your dollar or your USDC is available on, say, from your Coinbase, we're moving over to say either the DeFi or even on the centralized centralized crypto providers like BlockFi to earn some interest, etc. It happens pretty quick. Next is thoughts around the CBDC, which is a central bank digital currency. In China, it's also called digital currency electronic payments. China is going to roll it out, their DCP initiatives by Winter Olympics. Right? But whereas in the US, it's still going to take time. We talked about it. I mean, Fed is still looking at around the whole CBDCs. And around stable coins, while our regulators, they are looking at the stable coins and with microscope, his opinion is that we should give more respect and we should rally around these regulated stable coins, especially the ones which are backed by US dollars. Because if you look at it, the rest of the world is slowly moving away from US dollar commerce. This is a big shift. We won't notice it in a day. But overall, already the amount of the percentage of the central bank reserves from a US dollar, from 80%, it has actually come down to 60%. Not the percentage, but the overall amount of commerce that happens in US dollars over past 2 decades has already decreased. And countries like Russia, China, India, they are actually working or are running projects in which they will be exchanging. They won't be using US dollars as a medium of exchange. So what this crypto companies are telling US governments is, if we have a stable coins that become pervasive, and if those are backed by US dollars, at least you will see the demand of US dollars continue to stay high from those stable coin companies. Next section. Okay, I see a couple of questions. Leonard says, by the way, thank you for the report, for the link to the report. Yeah, it's a long report. I would say if you're interested in this one, must go and read that report. Which coin projects do you believe are best to invest in? And won't stablecoin depreciate like the dollar because it pegged to a dollar? So your purchasing power would decrease if you just hold stable coins. Because if you put in a stable coin and hold it, when you take it out for your transaction purpose, is still gonna get a dollar. But say if I want to hold some, if I have some cash which I want to hold because I want to, I have a need for it for short term, and I don't want to expose it to the volatility of the stock or the crypto. Today I hold that in my bank account, which gives me 0.02%. Now there are avenues to earn better rate of interest, which is offered by crypto companies. BlockFi offers around 8%. Celsius offers around 8.8% on stablecoin. Again, I'm not giving any financial advice, but what I did is move some of my US dollar from my bank account converted into a US stablecoin, USDC, and moved it over there. It is not FDIC insured, but I'm willing to take that risk. There's a difference between 8% and 0.025%. And yeah, I need to hold something for my short-term goals. I'll probably hold that over there. Otherwise, you can also, move it over to the decentralized exchanges as well. Cedric, you know that long times for transfer is a US problem. That doesn't happen in Europe. SEPA is instantaneous. Even on, I know at least in India as well, I think it's RDGS. That's also instantaneous. But there's a limit to how much I can do at an instantaneous level. Okay, so James already answered that on the stablecoin. Thanks, James. Where you can look up yield rates. But I think, I know a couple of them where like specific ones, or you can go to, is there anyone which gives us the real rates across all the exchanges, across all the assets? I don't know. But for a different type of crypto assets, the different projects provide a yield rates, and on their website you can go and find that out. There's a couple of them which at least I have is BlockFi, BlockFi.com. So most of them have BlockFi interest account. Then there is another one, Celsius Network. Then now you have the decentralized ones, which is like Aave, Compound. There are many of these. So right, Celsius also has got their interest account. Okay. But do your own study, because for example, these Celsius and BlockFi, because they offer these interest accounts, some of the state regulators are telling them that this is a security. So be careful about that. And some of the state regulators have actually asked them to stop offering accounts to the residents of those states, but that order hasn't been implemented. It was issued a few months ago, and they've been in negotiation. Okay, Zapper. So next in this report talks about NFTs and Web3 plumbing, right? What's happening in NFT, talks about the creator economy, how the creator economy has grown, and specifically also things like, Axie Infinity. This play to earn is pretty new phenomenon, especially from, after what we saw happening in Axie Infinity, in terms of how much they were making on per day basis. And all they were doing is asking people to play. And those folks were especially it took it like a storm in Philippines. and they were playing the games on Axie Infinity and earning money. And now there are many more projects like these. So all started with your NFTs, gaming, then talks about composable NFTs. There's a project called Loot Project. And some of these are kind of mind-bending projects. So if you really look at Loot was nothing but there was a sale that happened of this NFT. It's difficult to wrap our head around why would someone actually pay anything worth of money to get this as an NFT. But the whole concept was that the company behind this mentioned that if you basically buy these loot boxes and when they create games, etc., you'll probably you'll have access to these ability to say, right? And then people actually started trading about it. In some case, as it turns out, this text file loot bag, it was sold for 250 ETH or about $800,000 at the September price. What can you do with it? Not much right now. So these are some of the areas you really have to be okay, especially around these NFTs. You really have to see that what kind of a long-term value do you find in this, or do you really believe in this project before you go ahead and buy this, right? There has been NFTs of around the art. It was all I think came into mainstream when Beeple's art was sold for almost $65 million. And then we saw sudden burst into the whole NFT scenario, wherein now everybody and anybody is creating NFTs. And right now, people are just buying it. You'll have to find your use case, why you're interested in that art. Why do you think that art will go high in value? Because there is no science behind this. Yeah. So from NFT side, NFT fractionalization, that's an interesting part. Now, I have never looked at, I knew about this Pleasure DAO, I heard about it, but I have never looked into details around the NFT fractionalization. Now, as I think more, it makes sense. Right? I can't own, let's say, a Mona Lisa, but if Mona Lisa is tokenized or fractionalized, maybe I can own a portion of it. Now transfer that to the digital side. If you have a digital equivalent, not Mona Lisa, but let's say a digital art, which is an NFT. Right now, the NFT is, because it's non-fungible, let's say there's one owner for it. But there are projects happening to create, tokenize it, or fractionalize the NFT itself. Right? 2020, we might see more of these. This is great. Next is physically decentralized permanent web. So even though we call that our web ecosystem, let's say Uniswap or SushiSwap, or many of these exchanges are decentralized, they are not really decentralized at some level. Maybe they are all hosted on AWS, which is Amazon Web Services. Maybe their storage is, they're using Amazon's S3 storage. In that case, if Amazon desires so, they can shut it down. So we could see a lot more complete decentralization of overall web, right? There are projects. I'm surprised to see that Filecoin is not mentioned here. But there are projects like Filecoin, Arweave, SiaCoin, StoreJ. These are the projects which provide a decentralized way to store the data. Right? Today, let's say a lot of my family pictures are on Google Drive. But if Google deplatforms me, or Google, or if government wants, they can tell Google to just censor me, I will lose complete access, because Google owns the whole Google Drive infrastructure. Now, these projects, SIA, Storage, RV, Filecoins, these are all the decentralized one. So government cannot censure it because it's not owned by one particular entity. Similarly, there are projects around decentralized cloud providers. If my access point, if I'm trying to access Uniswap or Aave, so we went to Aave, right? And it is a decentralized finance process, it's a DeFi platform. But this website, it hosted somewhere, most probably on Amazon or on Microsoft Cloud. So that becomes a choke point. So there are some decentralized cloud providers projects happening. So we should be seeing a lot more progress on building the base layer and decentralizing the base layer of the internet itself. Again, we'll have to get into the details later. It's a good introduction. You find it exciting. Go ahead and read more about these projects. Physical network scaling. So that was for the internet, but this is a physical network. And the project that we have discussed in depth in some of our earlier meetings was Helium. How Helium is helping the companies that have a low bandwidth internet connectivity requirement, how they are providing those Wi-Fi capabilities or internet capabilities to those companies in a decentralized manner. You don't really have to depend on, let's say, AT&T or the 3-4 big telecom providers in US. You and I, we can actually become a wireless service provider. So hundreds and thousands of hotspots of those users can actually, each one of us contribute to become a wireless service provider. So that means we're kind of challenging and decentralizing the whole wireless industry. I know that's a big target, but this is what Helium is trying to do. And we have seen that the hotspots, which allow me to become wireless providers, has been growing like crazy. The Helium network has been growing like crazy. And if the demand continues to stay high, right? If there are more proliferation of IoT devices, which needs those low bandwidth wireless connectivity, right? Then why do I have to pay the huge charges to AT&T or Sprint? Today I have to because there is no other alternative. Right? But now companies like Helium are providing alternatives to those big centralized companies. So we should see more these permissionless, censorship-resistant networks, or such. I was just reminded of another project that recently started is around rendering to provide a decentralized rendering engine. So Pixar Animation, Pixar Studios have a huge hold on an animation rendering software. Right. So there is a project. I think they recently got funding to provide, the network resources, the computing resources for building a decentralized rendering platform. You can imagine anything, right? So that's around the whole Web 3.0. Sorry, we just ran over time. Probably it'll take another 5-10 minutes when we should be done with it. But I appreciate you guys still hanging around. And thanks, Marina, for sharing all those links. DeFi 2.0, that it talks about Tether, which is right now the largest stable coin by the market cap. And there is a lot of a FUD around the Tether as a stable coin. So then he also looks at the algorithmic stable coin. So today, the whole concept behind stable coin is their value will be stable to $1. How? What is backing that $1 value? Right. So Tether, and let's see the other stable coins. The other big ones are USDC. Then you got DAI, you got UST, and then there are BSD, and Paxos has got their own. I can't even recall what's the name of Paxos stablecoin, but there are many of these companies that issue the stablecoin and say that the value will be always near to a dollar, right? So Tether is one of them, which is the biggest one, but they have been concerned around, hey, what is Tether backing? What assets does Tether have to back it up to a dollar? Then USDC is another one. USDC has already told that if I want one USDC coin, they basically hold $1 to back it up. Right? It's not generated out of thin air. And then we don't know what the other stable coins are backed by. Then there are other stable coins which actually use a combination of other crypto assets to algorithmically hold their value closer to a dollar. Right? I see a couple of comments. I wouldn't call DAI an algorithmic stablecoin. It's more like a crypto-backed stablecoin. Yeah, probably. But if the crypto value changes, the whole idea, they probably may not hold the US dollars behind it, but a basket of other crypto assets. Right? So UST is from Luna protocol. DAI is the biggest one, which holds a crypto as its backup, as a reserve which backs up the stablecoin. And I think James mentioned earlier, we've seen an explosion in the usage of the stable coins. That industry has gone like crazy because there's a demand from investors as well as traders. One of the big concern around the whole crypto is the volatility. I don't want to hold something if I needed to buy or to transact. I don't want to hold an asset which could decrease, let's say 5% in next 10 minutes. So what I'll do, maybe I'll convert it into a stable coin, move that to wherever I need to make a purchase, and then wait and do a purchase an hour, 2 hours later, whenever I want to. I think messages. Okay. Leonard say, if a stable coin backs its coin up with $1, how do they make money? Because they lend the stable coins to traders, to institutional investors, and then they get an interest from them, and that some of the interest they pass it on to us. So there's a demand for stable coins comes from, let's say, traders, and some of the traders could be leverage traders as well. So that's where they make money from there. And I think, I don't know which one of this, but one of the stable coins, they did a really good job of actually detailing out how they make money. I don't know whether it was a Celsius or some of the providers, which actually give you, decent amount of a return on your stable coin. So I had the same question, how do you make money? Right. So did some research, but so that's how they generally make money, because they lend it out to others. Next talks about Uniswap. Uniswap V3 version is the most capital efficient decentralized exchange. And I think on some days it actually beats centralized exchanges like Coinbase in the overall trading volume. And the beauty about this being a decentralized exchange or open protocol is, there was some recent project, I forgot. I don't know if that company is mentioned here. I guess probably it is. But there's another company which actually picked up the Uniswap and moved it over to, I guess it was a Polygon network, which again, Polygon is much faster, much cheaper to transact on. Right? Again, as you go more deep into this whole DeFi and open sources, the possibilities are immense. So we don't want to overload right now on that one. This one just shows us the timeline of how all the, the infrastructure has been built out, right? Starting with a Bitcoin, 2016-17, we had tokens. If you were active, you will recall those whole big ICOs, right? Some ICO raised $4 billion. I think it was Telegram's ICO, raised $4 billion. Now they had to return everything because of SEC, fear of SEC. And then a lot of infrastructure work started to happen around 2018, 2019, to 2018 to 2020, L1s, L2s, which L2s are the scaling solutions. DeFi, all these protocols were being built. And, then we saw what happened in 2021. A lot of apps started to come up. And I guess we still got long way to go. Next section, it talks about Ethereum layers and bridges. Right? This chart was interesting for me. It says eventually there's a duopoly. And I could add one more here, which is on soda, right? It's a Coke and Pepsi. So operating systems, starting with many, finish with two. Same as the mobile operating systems. At the end of the day, it's a duopoly. So its concern was Ethereum will stay as a leader, but there could be another one which could survive with Ethereum. Which one that would be, we don't know. But I think in Ryan's opinion, it will be a multi-chain world, but the biggest one will Ethereum, and it will still, be around. Now, then it looks at some of the other competing projects on Ethereum, right? Solana has been having great summer so far. Then look at Polkadot, slow and steady rollout. Polkadot is again is an interesting project, which is trying to build out the basic infrastructure for creating a blockchain. Right? If I want to create my own blockchain, rather than me trying to build out everything from scratch, I can use Polkadot's infrastructure that they've already built in and create my own blockchain pretty quickly. Right? Consider this equivalent to creating your website by using, let's say, Dreamweaver, or writing down your HTML code, or using some of the tools to create your own HTML codes, versus using Wix.com. Right? So Polkadot, in my opinion, is trying to become Wix.com for blockchain economy. Right? But again, these projects take long. And only recently, I think it was December 18th, is when their first real blockchains actually opened up for users. There were 5 of them, the projects who won the auctions and have been building on Polkadot. It's only on December 18th that they opened up. So it's a slow and steady rollout. Next, it talks about Cosmos. I remember Cosmos in 2017, was a little excited about it, about the vision of it, but it looks like the vision is similar to what Polkadot has, which is creating a blockchain or network of blockchains. There will not be one blockchain in the world. There will be more than one. And those blockchains cannot exist in isolation. There have to be interoperability and ability to move on assets, etc. Cosmos was focusing on that, also working on inter-blockchain communication protocols. And then he also talks about Terraform. Terraform recently have taken, I think, the crypto world by surprise, because their token Luna has gone crazy. Again, we're not going to get into the details of that, but there's a Terra Luna. It's been going crazy over the past few weeks. Right. Again, this is an algorithmic. Terra and Luna are part of the same project. So he talks about Terraform Labs. It's a South Korean-based company. And I think the only company that I know of has actually sued SEC instead of it being the other way around. So generally, we'll see SEC going after crypto companies and suing them. But the first time I'm hearing, actually, Terraform filed a lawsuit against SEC. Okay, and next, then it talks about Polygon. Flippance ETH means the number of transactions, the volume of the transactions done on Polygon. Polygon is again a scaling solution on Ethereum, actually exceeded what was done on Ethereum. Right? And then he talks about other different scaling solutions, at what level. And I was surprised to see, this is exactly almost similar to what we discussed in last week's session, is various scaling solutions on Ethereum. So looks like I probably didn't miss. Gosh, I did the homework. He should have released the report sooner. Then I didn't have to do all that research. I could have just gone into this and figured that out. But yeah, I won't get into the details. You can go back and look at the last week video. We did a lot more detailed discussions around level 1 optimization, side chains, plasma, optimistic, and zk loops. Right? And then finally on the bridges, while the interoperability they are taken care of, we do see a lot of bridges coming up in which if I want to, transact on Polkadot blockchain or Cosmos blockchain, I can deposit my, let's say if I hold Ethereum, I can deposit my Ethereum and then take out a corresponding, I would say a wrapped or similar value or Ethereum, which could work on, let's say, Polkadot. So this concept is pretty common in DeFi, right? So let's say if I'm holding Bitcoin, and that's where a lot of Ethereum is actually used or is currently being used even outside of Ethereum blockchain, because a lot of great DeFi projects are, let's say, all are not on Ethereum. And similarly, a lot of Bitcoin is being used on the DeFi side, even though the DeFi is built on Ethereum, because you kind of deposit your Bitcoin here, and then you get an IOU, or I wouldn't say the IOU. You deposit your Bitcoin, and then you get an equivalent of the same Bitcoin value, another asset, which is generally called wrapped Bitcoin. It depends on what protocol you're using, and that you can use to maybe deposit it in a DeFi and earn some interest, or buy or sell, whatever you want to do. And those things happen through the bridges. So we've seen a lot of every big projects will build bridges to at least Ethereum, right? Because mostly the Ethereum is still the dominant DeFi protocol. Right? And lastly, it talks about DAOs. So I haven't spent time in understanding on DAOs myself. This is one area where I haven't spent time, so I didn't get into the details of this. But that's all around, Ryan's report. I hope you find it a little exciting, and it gives you enough fire to go ahead and read the report by yourself. It's a 165-page report. It could be a good holiday reading for you, right? So with that, we come to the end of a session. Maybe you have some questions, etc. We can go through it. I see a hand, Marina. Yeah, go ahead, Marina. You had a question? Or you want to say something? Okay, looks like no. Anyone? Okay, so Leonard, anyone can create an account? Oh yeah, of course. But it's like, if it is a code is available, let's say Facebook makes its code open source. Yeah, I can create a Facebook website which looks exactly like Facebook. But what's the adoption? So in crypto, many of the I would say most of the projects are open source. The great projects are open source. Bitcoin is open source. You can just copy the Bitcoin code. and create your own version of Bitcoin. But what's adoption? So the whole value in these projects come through adoption. Where you can find the past meeting videos, I actually upload it on my website. Hold on, let me just bring that up. So the website option gig. If you come here, you go to crypto meetup, and so this is like last week, so you can find the details here. So for blockchain scaling solutions, you'll have the video as well as the document right here. So we started uploading it only for, I think, past 1 or 2 months. So yeah, so we have it from October onwards. Cool. All right, anything else? So next week, probably we won't meet and because of holidays. So wish you all a very happy holidays. Stay safe. And we'll talk again in 2022. If no questions, what is your goal or mission? What is your goal or mission? Yeah. Okay, with crypto. So here's one. So when I was growing up, I grew up in a third world country. I had no idea what internet is, what computers were. Now I'm fortunate enough to be in Silicon Valley, and I want to make sure that I'm in forefront, and I'm enjoying the front seat ride when I see this crypto economy unfolding. That's what got me interested in this. When I started reading and learning about the whole decentralization and what an impact it can have on society, right? So my goal is to learn as much as I can and find out great opportunities as a retail investor. Right? And this is like internet in early or late 1980s or early 1990s. I miss that part, but I don't want to miss this one. So those who are new, I mean, most of you already know because we talk about Saturday and you've been attending these sessions, but a couple of you are new to this one. Full time, I'm not in crypto world. I have my 9-to-5 job, which there's no job in tech is 9 to 5. So I should say it's 5 to 9 because you have early morning calls with your offshore teams and whatnot. But I still want to make sure that I keep an eye on what's happening on the crypto world and stay active on this one and learn about it. And the best way to learn is when we learn together. So that's the reason why we started this meetup, to learn together on this one. Cool. All right. Thanks, everyone. So like I said, there won't be any session next week. So we'll see you in 2022. Goodbye.